Hey traders, happy Sunday. This is Ron Haid at Market Tamer. Hope you're doing great. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and the specific financial issue should always be addressed to your financial advisor. I played around with TradeStation and I got the beige, yellowish, whatever you want to call it, background in based on some of your emails and posts. I personally like the black better, but in the video it is a little different than when I'm actually doing it live. So we'll see how this works. I tried to get this to match more of the color I used at Thinkorswim. Again, these are daily charts. We'll start with Qs, and as usual, we have 4 lines. The blue I'm going to keep as the 8-day EMA. Red is 20-day EMA. Those are my short-term trend indicators. Then the institutional longer-term moving averages. The orange is the 50, and the purple is the 200. And those two are simple moving averages. All right, let's start with the Qs. We dipped below the 50-day on Friday, and we got back above it. So right now, that line in the sand, that orange line, that institutional moving average is holding as support. If it falls, target next institutional moving average, which is at the 200-day in purple. We take a look at the Dow, DIA, the diamonds. Sort of a similar situation in the sense that a moving average acted as support. Volume also came in nicely on Friday, and I also changed the volume here, by the way. Red is down, black is up, finishing days, and this solid line, that is the 50-day average volume. So you can see how we're getting above volume here. And even on Thursday, there was a spike in volume, but if you notice, prices finished off the lows of the day. That's actually a little more bullish than bearish, even though it was a red candle. But nonetheless, if that purple line falls on the Dow ETF, and that coincides with a break of right around here, so call it 252. So if purple goes, that's about 254, and then 252 falls. That's really it. Then down here is the target, like I've been saying, those previous lows. Not saying we're going to get there, but it's pretty ominous. Here is the spiders, the S&P ETF. We dipped below the 50-day in orange Thursday and Friday. Both days we got back above. Both days there was a rise in volume. Now for the S&P to sort of get a little bit of a slight bullish edge here, it needs to get back above both the 8 and the 20-day moving averages. That'll at least get rid of the bearish, the beginning of what this looks like to be turning bearish momentum. However, to regenerate the bullish trend, we need new all-time highs. We got to take out that bearish engulfing right there. Let's take a look at IWM, Indigo Whiskey Mike. This is the Russell 2000. Almost looks like a tweezer type bottom, right? But we're up near highs. That's not how that works. So we're below the 5 and the 20, excuse me, the 8 and the 20, but we're barely above the 50 and the 200, sort of sandwiched. Keep an eye on this 150 area. If that falls, then the December lows would become the target. MDY, the mid caps. It's almost the same. Again, tweezer-like bottom, but again, near highs, so that doesn't really count. If we break the 200-day at 345, there's this little double bottom right around 337. That falls. Again, that's the target. Now, what I want to do here is change the time frame to weeklies, because on the dailies, as we've just looked at with the 4 majors, it's sort of neutral with a little bit of bearish sentiment going on right now. But if I go to a weekly candle, here are the mid caps. We have a hanging man type candle Thursday on a week ago. So each candle is a week. Last week it was a hanging man type candle, and today we have a high wave doji. But where did we finish at the end of the day? Barely below the 8-day, or I should say the 8 period. So in reality, this still has bullish momentum because we're above 3 of the 4 major moving averages. So not so bad on the weeklies. How about IWM, the Russell 2000? We had a breakout candle a week ago, now a high wave doji. Where did we finish? Well, if I zoom in here, we finished a little below the orange, sort of on the blue, but above the red and above the purple. It's a mix. So I would say this one's sort of neutral to still bullish because we're still setting higher lows. Okay, let's take a look at the Qs. Again, weekly candle. Sort of a hanging man type candle, high wave doji, but still above all moving averages. Qs on a weekly basis, bullish. Diamonds, DIA. Bunch of dojis, another doji, neutral to bullish because we're only below 1 moving average, which is the most short term, and then the S&P 500, high wave doji, and we finished above the moving averages. So if you were to say to me, well, how is the outlook on a weekly basis? By reading the charts, the weeklies are still holding up. They're getting close to starting to turn more neutral, but actually they're doing better. Now, if I go to the daily, again, we're caught between some short-term moving averages, but holding above the 50-day SMA in orange on this daily chart. So looking into this week, overall, I'm just going to say flat out neutral. If we lose the 50-day, that will instantly turn with a bearish bias on the daily charts. So I'm going to be in Vegas this week at the Money Show. If you guys are going and you want to meet up, have a coffee or something, a drink, let me know. Just reply to the email. You can send me an email at CS, which stands for customer service, cs@markettamer.com, and I'll reply back and we can have a little drink or something. It's going on Monday, Tuesday, and Wednesday at Bally's. Now let's take a look at some other stuff. Here's SMH on the daily. The SMH here is a little more intriguing. We do have our high up here from about 2 weeks ago. Now we're getting sort of what I call the rubber hammer on Thursday and another one. Well, now this is looking a bit tweezer-like, and that can be a powerful indication of a bottom. The problem is it's all the way up there. If we were getting tweezers down here, different story, but we're getting them up here. So here's what I would consider. If this 50-day is going to hold, and then we gap back up, now we have a reversal pattern. Tweezer-like candles, and we get back above the 8 and the 20-day moving averages, or if you're going to use a 5-day in blue, I'm using an 8-day on this chart, but above the 8 and the 20, there's no other way to do it. It's bullish. That would be a very powerful reversal pattern. Not, I wouldn't call it super powerful if it was down here after a long downtrend, but nonetheless, so far, really interesting. Gap down, hold, tweezer-like bottom. I would like to see a gap up and a close higher. That's what would look really good to me. But right now, we're below the 8 and the 20, short-term bearish, clinging on to the 50-day. If we move lower, this fails, and then boom, 200 days to target. So maybe Monday we'll get some movement here, maybe Tuesday. But with that said, with me being in Vegas, if there's no major moves in the market, I'm not going to do a video until later in the week. If we do get a major move Monday or Tuesday, I will put together a video and email it out. So that's the semis. They're sort of clinging. It could go either way. You could go up or down with that type of pattern. Up bullish, down, like I said, not looking good. IWT, transports. We really dipped below the 200-day on Friday. I call that a probe, just like I talked about in Thursday night's video. This is concerning. Even if volume was high, I would say it's concerning. If we closed below the 200-day, I would instantly put 180 as the target. That's not a huge move, but this is the first dipping the toe in the water to see what's out there. There was buying coming in, but if you don't know candles and you think that's a hammer, it is not. You don't trust those type of hammers when you're at near highs, all-time highs. XLF, banking ETF. Good day on Friday. It was up about 0.66%. It's only barely below its 8-day. So of all the ETFs, this one's holding up the best right now, the banks. If the banks lose the 50 and the 200, which are sort of commingled there around 2660 something, then the target most recent swing low. How about Apple? 2 straight days of finishing well off the lows, some buying, but nonetheless, the price is still down. And we have a reversal pattern up here. We can call those island reversals. Doesn't mean the stock's never going to go up again, but short term, I would say it looks like a top might be in. If we lose the 200-day, there's an unfilled gap going back into March, right around that 170 area. How's Google doing? Since its earnings gap down, it's bounced right off the 200-day on Friday. If it breaks the 200-day, maybe 1100, 1050, 1000, almost like $50 increments. It's a little choppy on the way down, but the 50-day is important. Right now, this is a bear flag on the daily chart, flagpole, flag, and a breakdown. I mean, the big target would be down here, which was the Christmas Eve reversal. But you could, from a technical perspective, this is just no way bullish anymore if the 200-day falls. You've already lost 3 moving averages. This is the final nail in the coffin if you're holding out to be a bull on Google. Frankly, it's not looking bullish right now at all. How about Facebook? Sort of an orderly decline right now. It pretty much, yeah, it's done a gap fill on Friday. So if this thing gets back above the 8-day, that's bullish. This could still be viewed as a bull flag, flagpole, and then flag. Just watch the 20-day below there, target 50, target 200. And then we'll take a look at Uber and Lyft, if I can spell. Here is Lyft on a daily chart. If I zoom in, came down, came up. Now it's just trending lower. It's at 51 bucks. It was as high as 75. I get asked a lot, and there's no perfect metric or something, just my 2 cents for what it's worth. I don't like my IPOs because that's basically all them getting rich selling to the retail trader to, type of situation. We start getting 30, 40, 50% off of the original selling price. That's when I would at least consider the idea of maybe going long or something. Right now, 75 to 50, it's not enough for me. And technically, we just broke down. We have bearish engulfing. It's just not looking good for Lyft. And then if we look at Uber, and I just changed this to an intraday 15-minute candle, you can see the opening bar below 40, or down towards 40, I guess. 41.06 was the low. We come up here to 44.50, and then we rolled over. So it's at 41, what is it, 41.40 or so. It looks like it closed somewhere right around there. This is, again, way too wild. It would need to go a lot lower before I would be interested. They were talking, there's a lot of talking heads saying, oh, Uber's going to give us a tell in the overall market if it's going to be oversubscribed, undersubscribed, buying, selling. Again, same thing with Lyft. To me, it doesn't matter. These things are just ridiculously overpriced, and I don't want to be buying on the first day they go public personally, because it's the professionals selling to the sheep, selling to the retail traders. But we'll keep an eye on these. We'll follow them. If we start to see a turn, whether the fundamentals warrant it or not, I like to swing trade, trend trade. And if the buying comes in, the volume starts rising, hey, I can always consider bullish or bearish trade ideas. So that's it. A little longer video today. Hope you found it helpful. I hope you like the new screen. I will send it back to a daily chart, put up the S&P, and hopefully this looks better than the black. So again, if you're going to be in Vegas, let me know. I'd be happy to meet up. I always love meeting you guys. And I will see you in the next video. I just don't know which day it's going to be based on me being away this week. Have a great day, folks. See you later. Bye-bye.